So hello, everybody. I'm delighted to be joined today by Luz Urrutia, who is the Chief Executive Officer of Accion Opportunity Fund. Luz, welcome.
Thank you, Tim.
We last spoke in 2018 in terms of a broad-ranging interview around the CDFI industry and the things that you were seeing, how they were affecting then Opportunity Fund. And obviously a lot has happened since then, particularly the pandemic, the killings, the reckoning in terms of racial justice and social justice in this country. And I wonder what your reflections are on the last 15, 18 months in particular, what it's meant for your organization and what you think it means for the industry.
So thank you, Tim, for this opportunity. And as always, great to see you again. I think we're just coming out of a crisis of a generation that unfortunately has cut way too many lives short and decimated too many small businesses. But as the saying goes, never let a good crisis go to waste. And I think crisis breeds innovation. And coming out of this pandemic, we have seen multiple institutions from the public and private sectors and individuals coming together to really help small businesses survive and rebuild. And with it, really come forward with more inclusive products. I will tell you that it's been heartwarming. I know you and I have had this conversation many times, but it's been heartwarming and very encouraging to see how CDFIs have come together to work in unity to rebuild Main Street. And I really have never seen this deep level of collaboration before. Accion Opportunity Fund, we have been part of very exciting new community lending models that have come out of the pandemic that really have the ability to change the lending landscape for underserved small businesses across the country. As you know, the public and private sectors, both institutions and individuals have come together in a number of states to set up funds that will provide responsible and affordable credit, technical assistance, and financial coaching to small businesses. There are many of them: the New York Forward Fund, the California Rebuilding Fund in California, which we were one of the original founding partners, if you will. It brought together community lenders, CDFIs, banks, corporations, philanthropists, and the state government to provide these low interest loans to businesses in California. There's also SOAR, the Southern Opportunity and Resilience Fund, which is providing low interest loans and free business coaching to small businesses and nonprofits in 15 states in the South and the Southeast. And I really think that, these are models that should have been created a long time ago. The CDFI industry needs to improve its ability to acquire customers, to establish more standard underwriting practices, and access low-cost capital, patient capital, and have a conduit into which we can take the loans that we originate and transfer them off our balance sheet into a special purpose vehicle. And this has, allowed us to do that. So I'm really hopeful, and we can talk more about these partnerships and their benefits. But for us, it's been a year of another transformation. You lived with us through our first transformation when I got here, and now it's a different kind of transformation. It's been a wild ride. We combined, you helped us with that transaction, the Accion US Network and Opportunity Fund. We combined effective March 1st, 2020. That was like 2 weeks before shelter in place. So we all had to go home and we all had to sort of, change our focus from our strategy, which really was to build a national lending platform, raise capital, raise grants, to how do we help our customers? How do we help 6,300 customers in our portfolio, a portfolio at the time of $180 million, make sure that they can survive, this crisis? And so it was about, let's put our oxygen mask on first, AOF, so that we can put the oxygen mask on our customers. And so, the combination with Accion has been really a marriage made in heaven. I know you and I had a lot of conversations in your team. Is this the right thing to do? We know that the vast majority of nonprofits that combine don't make it. And are we taking a big risk right now? And I could not be more pleased and happier than what we have been able to accomplish in partnership and the combination with Accion.
So talk a little bit more about that. I mean, how does it change what you're going to be able to do? How are you going to be able to fulfill the mission that you And I think, by the way, congratulations, because I think that you've done a fabulous job in getting it off the ground. And I can only imagine, and I know from other things that I've been working on, that creating the right culture, the new approach to organizations is a real challenge over Zoom, Teams, whatever other media format that we're using. So I'm curious to hear what you see as the opportunity the opportunities that are going to arise as a result of the coming together of the Accion network and OF.
Sure. So, back in 2018, Accion did their strategy assessment of the opportunities that they had in the US. And they found that they could deploy $1 billion in capital in the next 5 years. Because you and your team helped us. At the same time, we did our strategy, independently, totally independent organizations. And that was when I came in as CEO in late 2017. And our strategic plan also found that we could deploy $1 billion in the next 5 years. So Gina Harmon, who was the CEO of Accion Network, and I got together. And, we started talking. And again, Accion and Opportunity Fund had been talking about a combination many years way before I got here. But now there was an opportunity with a change in leadership and Gina and I being close friends. And we thought, rather than going at this independently and duplicating efforts and investments, we realized that we had a shared vision, a shared mission, and shared values. And those are, I think, are 3 key needs that you need to have for any type of combination, for profit or nonprofit. And so we said, why don't we do this together? If we're going to scale lending to BIPOC and women-owned businesses, we really need to think about an integrated organizational structure, a technology platform, data analytics, partnerships that can help us scale. And so that's why we chose to combine, because together we felt that working towards a common vision to become a national lender, to develop products and truly transform the model of CDFIs in the United States is the way that we needed to go. And, it's really hard to scale lending when you have boots on the ground. And that's sort of pre-COVID what a lot of the CDFIs were doing. And so we believe that there is an opportunity to do it more efficiently and more effectively and do it at scale. And so you'll hear more about the technology that we've implemented. We're leveraging it day in and day out, data analytics and partnerships, and coupling that with a high touch customer experience so that we can deliver those small dollar loans and other support services that small businesses, particularly underserved small businesses, need around the country. One of the other things is, Accion brought an enormous amount of valuable assets. They brought a great team of people. They brought great digital assets, and they brought an impressive financial health programming. And in CDFI space, you're either focused on making small dollar loans and lending to small businesses, or you're doing technical assistance and financial coaching effectively. Doing both very well. I don't think there are any CDFIs that do that today. And so with them having the financial health programming, that was very solid, built for years with partners and, one-on-one directly by themselves, and our, excellence in lending and underwriting, I think that brought together, particularly with COVID, sort of the perfect combination that we were able to deploy those resources to small businesses over the last 18 months.
So Luz, you mentioned technology a lot there, and the fact that boots on the ground is very difficult to make it work, at least from an economic point of view, in terms of reaching or making small loans, providing advice to small businesses, et cetera. So I'm curious what you've done on that front. And in particular, I know that you have a partnership with Lending Club. So I'm interested to hear how that's evolved and how that has figured into your thinking.
Sure. So, the way I like to put it, Tim, is when you look at CDFIs, there are a lot of places where we can learn from, right? We don't want to be a fintech because that's not our business model, but there are a lot of assets and tools and resources and access that fintechs have that I think would be very beneficial to CDFIs. And we don't necessarily want to be just the traditional CDFI because, unfortunately, we need investments in technology and we need to be able to reach customers at scale. And the model of boots on the ground, as you mentioned, is not a scalable model. And so back in 2016, and Opportunity Fund, pre-combination of Accion, we were the leading nonprofit microlender. And so in 2016, the partnership with Lending Club was, launched, and it was basically, a combination of, after the 07-08 crisis, a lot of irresponsible lenders came to market. There were other fintechs that were very responsible, that were very good, Lending Club being one among many. And they still had a challenge that they were turning down a number of small businesses that would not qualify within their credit box. And so the two organizations got together and said, we have to be able to have products for small businesses that get declined the first time, so that they don't go into these irresponsible lenders. And so we partnered, we built our credit box ingrained in their credit box. So when an applicant, a small business, applied for a loan at the Lending Club website and they got rejected, then in the background, they would be checked against our credit box. And if they passed, quote, they would get a pre-qualification offer. And then they would come to one of our team members, and then we would take the relationship from there. And so that really scaled nicely. We were able, that was a second look program. It was really, a national award-winning partnership. I take no credit for that. That partnership was in place when I got here. And then fast forward, Lending Club decided they still wanted to be in the small business lending space, but they really didn't want to do all that they were doing, right? They wanted to have somewhere that these small business owners, both the second look, but all other small businesses, had a home. And so we spoke with them, and we decided sort of to take over that part of their small business lending, where we established this co-marketing, co-branding agreement, where leads are still coming into their website, but now they're coming directly to us. So we've interfaced, we expanded our technology, we have interfaced with them. And so now these small businesses come to us, we take those that we can underwrite, that fit within our target market, LMI, people that don't have access, et cetera. And those that are more prime, more mainstream small businesses, we send them out to other lenders that can underwrite them, because we're very focused. We are a CDFI, and as a CDFI, our lending goes to LMI, BIPOC, so Black, Latinx, et cetera. So that partnership has really been the foundation for us to, launch other partnerships like the American Express partnership that we launched last year. So I think that is really important, to use technology, but also combine it with a high touch customer service, interference. Because there are some businesses, that 90% of the time they go through the digital tools and they need very little support. But there are businesses that do need help filling an application, need help understanding what documents they require, need help understanding what other things they need to qualify. And so you need to have someone there, either on the phone or through chat, that can help them get through that process.
So I'm curious, does that mean that you've set up call centers? Is it all onshore, or is it some of it offshore? How have you evolved over the last few years in that regard?
Yeah, so, sometimes, as they say, it's better to be lucky than good. Back in 2019, and this was way before COVID, we had made the decision that we really needed to invest in technology and invest in scalable platforms, both digitally and call center, right? And so we are headquartered in the Bay Area, which is one of the most expensive places to hire talent. And so we worked with an organization that we've worked with before in our previous lives and other organizations that provides sort of an outsourcing call center. And it's our policies, our procedures, it's our quality control. What they provide is the human talent. And they help us to, scale up and down based on time, volumes, et cetera. So if we had not had that, and I'll talk a little bit about what that means, I don't know that we would have made it through COVID, because to give you an idea, this call center is now open 7 days a week, 12 hours a day in all US time zones. So our customers are generally working during the day. And if we have people staffed in our call center between 9 and 6, that's when our customers are working. They need us before they go to work and after they get home from work. And so having that ability to support them 7 days a week when they're available, and being able to do it, with the tools, with a telephony system, with a quality control, being able to, record the calls, make sure that we can go back and coach and teach the team that's working with the small business owners is incredibly valuable. To give you an idea, our average number of calls pre-COVID was about 300 to 400 a day, both inbound and outbound. There were days during the heat of COVID that we were getting 1,900 calls between inbound and outbound. Had we not had that capability to muscle up and down, I don't think we would have been able to serve the 6,300 customers, all of whom had some level of need, whether it was they needed payment deferment, payment forgiveness, new cash injections to replace revenue that they had lost. It was really, some of those conversations, I had the opportunity to listen to the recording, and it will tear your heart apart. But we were very grateful that we were able to establish this support system to help customers get through this, what has been the most difficult time in their lives and certainly ours.
And I mean, that's awesome. I mean, I'm not aware of any other CDFI in the country that has a call center, for example. Are there others that you're aware of?
I don't know. I can't say that they're not. I just don't know. I know that it was a unique model when we started talking about it and spoke with other CDFIs. And the reason that we put it in place is because, coming from other organizations in the for-profit world and understanding what are the tools and the technology and the things that you need to scale a lending organization, that seemed to be like one of the lowest hanging fruit for us, right? That we could expand. So, but I don't know if there are others that do it or not.
And that obviously plays really well into the, what you call the high touch element or some level of touch with the customers, and I guess prospects as well, so prospective customers also. What about the underlying technology for the lending activities or the advisory activities? I mean, how have you evolved that? How does technology, for example, play into decisioning around credit and so on and so forth?
A lot. I mean, it's a combination, technology, data analytics, and people, right? And it's not one over the other. I think it's a combination of knowing how to effectively use all three. We launched a new loan origination system last year in the middle of this that really had to be up and running when we did the transition with Lending Club and interfacing and APIs. And so we, that technology, we have learned a lot. This past year, we'll deploy over $120 million. Our fiscal year ends in June 30, as in today, and we'll be close to $120 million in loans to close to 3,000 small business owners. And I think that having that technology and having been able to implement different types of scorecards, because one thing that we all need to remember is that not all small businesses are created equal. We have different personas that are coming to us with different elements, different credit profiles, different needs. And, we just don't do working capital loans. We do equipment financing, meaning long haul trucks. We finance mobile food trucks. We do digital lending. We do, working capital for community partners that have customers. So we have different personas. And so you have to develop, credit scores and customer experiences that help support each of those customer needs. And so, one of the things that I will tell you, and we come at this work with a lot of humility, Tim, and we know we still have a lot to learn and we have a lot of work to do. And we have a lot of investment to make. And it's every day. It's every day that our teams are hustling to get there. But we have the commitment. We have learned a lot. As you know, being a California-based CDFI, a lot of our portfolio had been focused on the Latinx community, women-owned businesses, and immigrants. And now we are expanding our reach into Black-owned businesses. And what we're learning is that a lot of these businesses are small startups. Perhaps they're not as established. In the last year, I read an article yesterday that Black-owned businesses in the last year have been established at the highest rate of the last quarter century. So these are startups, and these are different needs and different segments. And so we're learning a lot, and we're using, a lot of AI. We're implementing a lot of tools to be able to access the small businesses' bank accounts when they give us permission, so we could see their cash flow. Other tools that give us, insights into the small business to make sure that we're making loans that are good loans, that are sized appropriately for that small business owner, so that they can succeed and they can come back and, borrow more money from us and continue to grow.
So data is clearly a very important element of this as well. And I think sometimes people forget it's not just about the loans that are made or the number of people that call. It's also about the data that over time you're able to collect, because to your point, it gives you very interesting insight.
Yeah.
And I assume that's also part of what you're doing.
Absolutely.
So, I mean, I just, while we're still talking about the small businesses directly, two things. So the first thing is you mentioned the financial health programs that Accion brought to the table. How does that work with the small businesses that you're serving? And then the second question is, which is related, is that the CDFI industry still is pretty much a lending industry. And what are you doing as a result of the Accion digital assets, the health program component, financial health program component, to think about changing the way that we extend credit to small businesses? So, not necessarily, and I don't know where you are on this, having FICO scores, for example, or requiring personal guarantees or whatever else it happens to be.
Sure. So on the first question, I mean, as I said, Accion Network brought to us an impressive curriculum of business advising, financial coaching, technical assistance. And I have to be honest with you, I didn't realize how impressive it was until COVID hit. And so last year, we did webinars, one-on-one coaching sessions. Some of these we do directly, some of these we do direct with partners online. And there were about 12,000 small business entrepreneurs that signed on to those webinars and those coaching sessions. And we have this online resource library, which is free, which is on our website, aofund.org, where we had more than 670,000 unique users coming in to access information. So last year, for example, we were running, webinars and sessions on small businesses, how to pivot your business, how to become digital, how to acquire or retain customers, how to negotiate contracts with landlords and extend the maturities or, reduce the rent, how to help with, employee layoffs. So it was a variety of topics, because what we know is that capital is extremely important, but capital matched with a solid technical assistance, business advising, coaching, and other support networks is really what small business owners need in order to thrive, and more so in the last year. So that program continues to be a key focus of ours. I'll talk a little bit about our 3-year strategic plan that we just got approved by our board last week. We are hoping that in the next 3 years, we'll be able to reach 5 million individuals through our online free resource library, as well as with all the webinars and coaching and mentorship classes that we hold. And so that is really sort of, right now, I don't see capital by itself, right? It's got to be paired for small businesses, because they need that kind of support.
So let's change the topic a little bit and talk about sources of funding, because I know that's always been top of mind for you, and some frustration with how the industry used to receive its funding. How has that evolved particularly over the period of the pandemic? So my sense is it's been a pretty significant change, and I wonder whether you've seen that at AOF, and also whether you believe that the new funders are in it for the long term.
So there's two pieces to that, right? One is, as I mentioned earlier, the partnerships that were developed, the California Rebuilding Fund, SOAR, New York Forward Fund, where you had a number of partners coming together, both from the private and the public sector, and providing very low cost capital, philanthropists helping subsidize some of the costs the CDFIs are incurring in deploying these loans, a special purpose vehicle being formed to transfer those loans from the CDFI's balance sheets so that we can continue to lend. So that to me would be ideally what we would love to see as the long-term solution for scaling lending in the CDFI world. But let me talk a little bit about that. But before we go there, for a very long time, we have been diversifying our investor base. Our first attempt was to launch the impact investment notes in 2018. And one of the benefits of those notes is that they carry less restrictions than the loan covenants that are imposed by CRA lenders. For example, the biggest one being the 20% net asset ratio, which I know you hear about it all the time from all the CDFIs that you guys work with. And for those that don't understand what that means, is that for every dollar of loans that we have to raise the equivalent of 20 cents, 20% in capital or in equity in net assets. And for a CDFI, net assets are built in one of two ways. We earn surpluses, right? Our revenues are greater than our expenses every year, and we raise philanthropy. And also one of the challenges that we have is that banks, when they're lending to us under CRA, they don't evaluate CDFI's assets on a risk-adjusted basis. They look at all of our assets having the same level of risk. And what I mean by that is that we have to hold the same amount in net assets or capital for cash, liquid cash on the balance sheet as we do for loans. So if we have $1 of cash, it requires that we hold 20 cents of equity for that $1 of cash. And so they also don't look at our loans that have loss reserves that may be supported, for example, by the state of California, as being a lower risk than a loan that has no guarantee behind it. And so, CRA money is great. We really like it. It helps run our business. It's very low cost capital, but it has a lot of restrictions that now that businesses need more of our loans is really becoming a challenge, an even bigger challenge. So in the past year, what we did is, we launched a number of efforts to raise more impact investment and other sources of capital that are more flexible and patient than CRA. One of those were these funds that were created where, we're not required to have those loans on the balance sheet. We're transferring 90 or 95% of the loans to an SPV. We continue to get funding to continue to lend and scale our impact. I think one of the things that CDFIs, and Tim, you've heard me say this multiple times, I think we have hurt ourselves by confusing patient capital with permanent capital. And they're not the same, right? I have found that there is a significant pool of investors who are willing to provide more patient capital. And so as CDFIs, that is what we need to do. For example, we established a partnership with American Express. They provided $40 million in EQ2s commitment over a 2-year period to help us deploy loans to businesses owned by people of color, mostly Black-owned businesses. We also established a significant relationship with Calvert, who we also think the world of. They truly understand the CDFI world and the challenges that we face. They provided us $14 million. And we plan over the next 3 years to raise over $150 million, both in loan capital and philanthropy, so that we can deploy our ambitious goal of $500 million in loans to businesses that are owned by people of color and women. So I think like every other CDFI, we are expanding. We're looking for more vehicles like, the California Rebuilding Fund, SOAR, and others, because one of our biggest challenges in being able to scale is the balance sheet. And you know that, and you and I have had conversations for years about that.
Yeah, and it's interesting because, I think Opportunity Fund before they coming together with Accion was very innovative. And I'm thinking about the CalCap utilization of the CalCap program in California and how you applied that to your trucking loan business. And I think what people don't realize is that, your default rates, delinquency rates are minuscule. So your point about how banks view the risk and the requirement for the net asset ratio really is driven home by that. And then I think the other thing that people don't realize is that you forced a significant reduction in the market price, the cost of loans to the immigrants who are seeking to buy the trucks, and you had the environmental impact too. So that's huge. I mean, if I'm an impact investor, I get a return, and I'm having an environmental impact, and I'm having an impact on the human capital component on people's lives. So that's
Absolutely.
amazing,
Absolutely.
right?
Yep, absolutely.
And I imagine that California is going to be one of the largest recipients of state small business credit initiative program. So I imagine that you're working on figuring out what sort of product offerings you're going to have for that as well.
Absolutely. We were deeply grateful to see that SSBCI was authorized for $10 billion, and California, being the size it is getting close to $1 billion. So that's going to be incredibly valuable for us to be able to scale, right? And to have credit boxes that are more conducive to lending to businesses that have been left behind by the mainstream financial system and have the least access to the capital and the resources that they need.
So Luz, that's a good point at which to say thank you very much, and to ask you if there are any final thoughts that you'd like to share with us.
I would just say, this year has been really hard for everyone, certainly more for those that we serve. We have been privileged and humbled and honored to be able to serve the thousands of entrepreneurs that we had in our portfolio and new ones that have come along. I think that, one thing that we didn't talk about was sort of the talent, right? Behind all of these numbers, there are real customers, and there are real people in the CDFIs that are working, round the clock, trying to help these businesses get through. And it's a challenge for CDFIs to have the dollars to make the investments that they need to make, not just in the technology and the policies and procedures and the compliance, but in the people, which is really nothing matters. Vision, mission, strategy, nothing matters unless you have the right people on the right seats on the bus. And I think one of the things that we're seeing is that everybody's stepping back and going, what do I want to do? And who do I want to do it with and for? And where do I want to do it? And so we are seeing a lot of folks that we would have never expected would come work at a CDFI because they had these great jobs in for-profit organizations that are reevaluating and having a mission purpose-driven job where they're having incredible impact in the communities that they serve. We're attracting, and I think other CDFIs are too, incredible group of people. And I think that the work, I say we are at the bottom half of the first inning of a baseball game, meaning we have a lot of work to do. We have a lot of work to do to rebuild Main Street. We have a lot of work to help these small business owners and their families, regain what this pandemic took away from them. And we can only do it collectively. Neither one of our organizations individually, 2 or 3 put together, can do it. It's got to be a collective effort of institutions, banks, CDFIs, government, philanthropists, organizations like you, bringing awareness and providing us the help that you and your team do, every day, to ensure that we can get the capital and the resources. Because before COVID, as you know, Tim, you gave us this statistic. It was $87 billion gap for dollars under 100,000, for loans under $100,000 for small businesses. We believe that gap is now going to be bigger, right? Because banks are retrenching even more because of the credit risk. A lot of the fintechs we know have gone out of business. And so the need is going to be greater. And the institutions that are left to help support this rebuilding are CDFIs, but we can't do it alone. And we need the help of many others coming together so that we can build the kind of relationships that CDFIs have been known to build in the communities in which they operate. So Thank you so much. This has been wonderful as always.
Luz, thank you. And thank you for all that you're doing. And it's wonderful to see your vision come to fruition. And your unrelenting focus on the customer, the client is, I think, a large part of that. So thank you. I really appreciate you and your time.
Thank you very much.